Well, first, let's get it started with Netflix. The shares today are under pressure, and taking a look at the stock, they are falling into the red as investors digest the streaming giant's fourth quarter earnings results. Now, light guidance for its current quarter and a domestic subscriber miss has the street's attention. Joining us now is Santosh Rao, head of research at Manhattan Venture Partners. And Santosh, when you take a look at the numbers, it wasn't weak at all, really, when you take a look at earnings and revenue, but it was that guidance and the domestic subscriber miss that has the street's attention. What do you make of these numbers?
Yeah, I think on balance, the numbers were pretty good, like you said. Pretty much in line. If you look at the guidance for the first half as opposed to the first quarter, there's some seasonality in it. It was pretty much in line. So I think that was not a miss. But overall number for 2020, they expect cash flow losses to decrease. So the fundamentals are good because that's a big concern with Netflix. Are they going to need more cash? How are they going to fund all their new shows? So I think that fear is getting less and less. So overall, I would say there was enough for the bears and the bulls in this, and that's why you see the stock going down. And it was kind of in a holding pattern for a while. It's fallen down, but there's enough for bears and the bulls to hang their hat on.
Santosh, what do you make of the comments that Netflix made about the competition? So that was obviously something that the street was watching very closely. And when it came to competition, at least outside the U.S., they were saying that they didn't really feel any material impact, at least yet, from some of its rivals. Do you think that will continue to be the case for the rest of the year?
I absolutely believe so. I think if this quarter's results are any indication of the competitive landscape out there, I think it was a pretty good quarter for them. It was very muted, the competition was. We thought the subscriber growth would fall off quite a bit after Disney and all the others came on. So I think overall, I think that's good. International is their strength right now. They are the incumbent leader. They're a huge lead on others. So we'll see. It'll take a while for others to catch up on. So it's very popular outside. The ARPUs are up. Everything is up. So I expect a good international growth and overall growth in general.
When we take a look at the pricing that Netflix has been dealing with, one of the things that was cited in this earnings release that recent price changes were one of the reasons for low membership growth in the U.S. and Canada. When you take a look at Netflix prices compared to some of the other rivals that are out there, does Netflix still have the same pricing power that it did maybe a year ago?
It still does. And that's the beauty of this thing. I think the bulls can hang their hat on that. The pricing power is still there. And they can point to their Oscar nominations, the quality of the shows that they're producing, and all that stuff. So I think overall, the experience of Netflix is still there. So the pricing power is still there. So I think we'll have to wait and see how it plays out. The competitors are coming in, but they have their own nuances, their own twists and turns in terms of how they're going to price it and how they're going to go. The content is still weak on all of them. So I think Netflix is ahead on that. It's their lead to lose in this race for the superiority.
Santosh, when we talk about what differentiates Netflix from some of the other rivals out there, one of the things is that Netflix is sticking to its current subscriber path, I guess, right now. And they're saying that they're not going to incorporate any sort of advertising into Netflix's streaming. When you take a look at that, do you think that that is a smart move, or should that be something that maybe CEO Reed Hastings considers down the road?
I think that's a very smart move. I think advertising is a whole different ballgame. I think that you're competing with the majors, the Amazons and the Facebooks and Googles and all that. So I think to stick to this subscriber model is the right way to go at this point. Down the road, I don't know. But at this point, I think he's right in sticking to his DNA, which is really subscriber growth and really growing the business in that space.
All right, Santosh, thanks so much for joining me today.
Thank you.